In today's video, I am going to explain how to use the High Volume Pivot Support and Resistance Zones indicator by BigBeluga on TradingView. Instead of manually drawing simple, unweighted lines on your chart, this advanced market structure indicator tracks the volume of structural swing highs and lows. It automatically creates dynamic zone boxes and fits a live Cumulative Volume Delta, or CVD trendline, inside them, helping you monitor volume pressure exactly where the market is most likely to react. To add this tool to your workspace, open your TradingView chart and click on the Indicators tab at the top of the screen. In the search bar, type in High Volume Pivot Support and Resistance Zones and look for the version created by BigBeluga. Click on it once and it will be added directly to your active chart. At its core, it is an advanced market structure indicator designed to find key support and resistance levels backed by heavy trading activity, often referred to as institutional volume. By filtering out lower volume price moves, it ensures that the zones plotted represent areas of significant market interest. Furthermore, it embeds a live cumulative volume delta trendline right inside the box. This allows you to see the micro order flow without cluttering your screen with separate bottom dashboard panels. Let us break down exactly how it works under the hood. The Pine script logic begins by identifying structural swing highs and lows using a customizable lookback period. However, it does not just plot every pivot. It applies a volume validation filter by calculating a volume moving average baseline and multiplying it by a specific threshold. If a pivot bar's volume exceeds this baseline, the indicator confirms it and draws the dynamic zone boxes. From that exact bar, the script calculates the volume delta by subtracting selling volume from buying volume. It then normalizes these running CVD values so they scale perfectly inside the zone box coordinates. Finally, the script includes a roll inversion logic. If price closes entirely through a zone, the zone fundamentally flips its structural roll. Learning how to use and read this indicator is very straightforward. On your chart, red boxes highlight active resistance zones, while green boxes denote active support zones. Inside these boxes, pay attention to the dotted CVD trendline and the live volume label, which visually summarize the net volume delta accumulating in that zone. If a strong candle closes entirely through a resistance or support box, you will see a breakout or breakdown triangle printed on the chart. At this point, the box will automatically recolor itself and change its solid border to a dashed line, indicating that the zone has undergone roll inversion. Additionally, the tool plots small circle markers when price pulls back to successfully retest an active zone, and diamond markers if price tests a broken zone that has successfully flipped rolls. Finally, let us look at the settings. You can easily fine-tune the pivot geometry controls, adjusting the lookback lengths and volume threshold multiplier to adapt to different assets or timeframes. You can also customize the visual zone overrides, including background colors and line styles for seamless integration. That covers the mechanics of this indicator. I would love to hear your thoughts in the comments below. What volume threshold multiplier have you found works best for the specific assets you analyze? Thank you for watching and happy charting.